If you want an easy, cheap way to invest into the largest US companies all within one purchase, then Fidelity's S&P 500 index fund with the ticker of FXAIX is one of the simplest yet best overall options in the market to build wealth over time. In fact, there is a reason why the legendary investor Warren Buffett has said that for the ordinary investor, the best thing to do is buy 90% in an S&P 500 index fund. But before we get started, my name is Danny Sully, and all I ask is if you do find value in this video, that you consider hitting the like and subscribe button for future content like this. With that said, let's first go over what is FXAIX. Alright, so first realize that FXAIX has actually been around since 1988 and is considered an index mutual fund with the sole purpose to track the S&P 500 index. And so when you go to buy this fund, you are going to get instant exposure to 500 of the largest US-based companies, where the top 10 holdings make up roughly 40% of the entire fund, with companies you probably heard of like Nvidia, Apple, and Microsoft that carry the most weight, with each containing roughly 6 to 8% toward the fund. And largely because of the top holdings, when you go to buy this fund, realize that 36% of it is exposed to the information technology sector, and that following that is financials, consumer discretionary, or communication services. Which, fun fact, but FXAIX is actually Fidelity's most popular mutual fund, where you can see it is the third largest mutual fund in the world based on its assets under management, that is roughly $737 billion, where the only two larger mutual funds ahead of it are Vanguard's FXAIX and VFIAX, which are higher by quite a large amount. But there are a few other Fidelity funds near the top, and if you notice that red dollar sign by most of them, the non-Fidelity ones, that is because it will cost you a fee to purchase them on Fidelity. Now, I'll mention a few other top Fidelity index mutual funds to know about later in the video, but let's now go over the difference between FXAIX and other ETF versions. Now, ETFs, short for exchange traded funds, have been growing at an incredible rate over the past few years, as well as the amount of options that are continuously being offered. But realize that ETFs are very similar to mutual funds, as they allow you to own hundreds to thousands of different investments all within one purchase, but the biggest differences that they have are based on how they are structured. To see the main similarities, understand that both mutual funds and ETFs can be active or passively managed. They both offer broad diversification, they both have expense ratios, many allow automatic investments, and they're usually flexible with fractional shares, but that also depends on the platform you use. And then as far as the main differences, understand that mutual funds are less liquid because they only trade once per day at the end of the market day, where ETFs trade like stocks throughout the day. This is exactly why if you look up the mutual fund FXAIX, you will see only one price shown per day, where VOO, just like ordinary stocks, will continuously show changes to its price as the market is open, which is why the investments are considered to be more liquid. On top of that, mutual funds may also have a minimum investment requirement, where a good example of this is if you are investing through Vanguard, where they have minimums required on their mutual funds, and for most index funds specifically, you can see the minimum is $3,000, where most ETFs typically do not have minimum requirements. And then another big difference between the two is that mutual funds typically have to be bought through particular brokerage firms. So if you're investing on Fidelity, you'd ideally want to stick with Fidelity mutual funds unless you want to pay a high fee. And then for ETFs, you can buy them through nearly any platform. And an easy way to tell the difference is that mutual funds typically have 5 letters in their ticker symbol, like VFIAX, or for this case, FXAIX, where ETFs are mostly 3 to 4 letters like VOO or JPI. And the last point to mention here is that mutual funds are known to be less tax efficient than ETFs, and this is especially important to understand when it comes to investing into actively managed funds in regular taxable accounts. I will say for me personally, I actually prefer to keep things simple and only use mutual funds in tax advantaged accounts like my Roth IRA, and then for any traditional brokerage accounts, I prefer to use ETFs. Now, as I showed, 2 of the 3 most popular mutual funds track the S&P 500, where if we look at the top ETFs in the world based on their size, all 3 of the top 3 track the S&P 500, that is VOO, IVV, and SPY. Needless to say, the S&P 500 is known to be the single best investment as a foundation to nearly any investment portfolio, and that is why Warren Buffett recommends 90% goes into it. But the thing to realize here is that if you don't have a Fidelity investment account, you're likely going to want to buy an S&P 500 ETF like VOO, unless you're investing through another brokerage firm like Vanguard that has a solid mutual fund option like VFIAX. Now, I'm going to make a complete breakdown of FXAIX versus VOO in another video coming up, so if you are interested to watch that, don't forget to subscribe with notifications on. But knowing that, let's now go over why you should pick FXAIX. Now, one of the nicest things about buying any index fund, for this case any S&P 500 index fund, is that they all have a super low cost to own them over time, and with FXAIX, that cost is known as the expense ratio, which is 0.015%, and all that means is that for every $10,000 that you invest, you are going to pay $1.50 in fees every single year, and do know that that amount is automatically taken out over time. It's not something that you're going to have to pay separately. Aside from that, as I mentioned, there is a lot of history to look back to with this fund, and if we look at the historical performance, over the past year, it has grown 14.98%. Over the past 3, it has averaged 20.56%. The past 5, it has averaged 15.26%. And over the past 10 years, it has averaged 14.62%. Not just that, but since 1988, FXAIX has grown at an average rate of 11.23%. And to get even more historical, since 1957, the fund has delivered an average annual return of 10.54%. All in all, think about the fact that if you invested $10,000 into FXAIX 10 years ago and started investing $500 per month, then that means you would now have $166,000. Or if you started doing this when it initially came out in 1988, then that means that you would now have over $3 million based on how well the fund actually performed itself. And like I said on how cheap this fund is, with the 0.015% expense ratio, that means that throughout the entire time of growing and building a $3 million portfolio, after the 37 years, you would only have paid $16,000 in fees. Where if you instead bought an actively managed fund that, let's just say, averages an expense ratio of 0.75%, which is fairly common, then that means you would have ended up losing out on a ton of money because your total fees would now be over $500,000. All in all, that is exactly why the S&P 500 is one of, if not the best investment that I believe nearly anyone could use to build wealth over time from the stock market, and more importantly, lead you into a successful retirement. Now, something to realize here is that the numbers I used were average returns over time. So when it comes to buying FXAIX, you shouldn't hope to sell it in 6 months because the stock market can be very volatile and no one knows what could actually happen. For instance, over the past 10 years, you can see the majority of the years were positive returns, but 2 of the years declined and 1 of them was down 18%. Where if we look even further back to the data, in the year of 2008, the S&P 500 declined 33%, and even worse, in 2002, that was down almost 35% in 1 year. And for those curious, the fund also pays out a quarterly dividend, where over the trailing 12 months, it has paid a 1.11% dividend yield. Now realize that there are many other mutual funds in the market that you could choose from, where 2 of the other top Fidelity options that I like to consider would be the Fidelity Total Stock Market Index Fund with the ticker of FXAIX, where this fund has $122 billion in assets under its management, and it's actually very similar to the S&P 500, but now it includes small and mid-cap companies, where the total holdings jump from 500 to now offering over 3,800 holdings. So if you are one that would rather just get the entire exposure to the US stock market all within one purchase, you could instead purchase FXAIX, that pretty much allows you to do so all within one purchase. But do know that that additional exposure has actually caused slightly lower returns over time, where you can see the past 5-year average was 14.08%, and over the past 10 years, it has averaged 14% per year. Which also know that this fund became publicly traded in the year of 1997, where it has averaged 9.26% per year, and it's also super cheap to own at a 0.015% expense ratio. Now, another top option that I love to talk about and also own myself is the Fidelity Large Cap Growth Index Fund with the ticker of FSPGX that is a 0.035% expense ratio. It was created in 2016, has $43 billion in assets under its management, but the benefit of this fund is that it tracks more of the top growth-oriented companies, where you can still see the same top holdings like Nvidia, Apple, and Microsoft, but now each of them have over 10% of weight toward the fund, and if you add the top 10 companies together, they make up roughly 60% of the entire fund, where there is a total of 395 holdings, and crazy enough, the information technology sector makes up most of the weight of the fund at almost 54%. Then a couple of other Fidelity mutual funds that you could also learn more about include the Fidelity Total International Index Fund with the ticker of FTIHX, or the Mid Cap Index Fund that is FSMDX, or the Small Cap Index Fund that is FSSNX, that are just a few of many options to consider. But the point to get across here is that the S&P 500, being considered the stock market benchmark with a ton of history and data that backs it up, I agree with Warren Buffett that an S&P 500 index fund is the single best overall investment that one could make into the stock market to build wealth over time. That one is especially great for retirement investing. Two, it's the fact that you can actually gain a lot of long-term confidence by owning it. And three, it is super easy to buy and automate and continuously invest into over time as you earn an income. And so if you are one investing on Fidelity, I personally believe that they have a great platform. I use both their Roth IRA and HSA. I've had great experience with the company, and the S&P 500 index fund FXAIX has also been a dominant force in my accounts, growing very well over the past few years, and I highly recommend it as a top option to consider for those that are using Fidelity. Now I will mention I have created an entire index fund cheat sheet completely free for you that I'll have linked in the description below, and while you're at it, consider subscribing to our newsletters so that you can stay up to date with your finances and continuously learn what's going on at InvestLane. End of the day, our mission at InvestLane is to help you save and invest wisely to build lasting wealth. So please do whatever you believe is best for your situation. This is not financial advice, and you must do your own research. Which, if you found value in this video, don't forget to hit the like, subscribe, and notifications button for future content like this.